Hello and welcome to this edition of Own the Journey, where we're speaking with amazing business leaders from around the world, bringing their wisdom to you. And today we've got Mr. Jim Lewis, who is a CPA with BRS CPAs here in Springfield. And we're super excited to hear about some of the stories and learn some of the strategies that maybe can help some business owners make some better decisions. And so, Jim, start us off. Just tell us a little bit about your history. What made you get into the CPA world and how you landed where you're at?
Well, first off, amazing business leaders. I'm not sure I fall into that category. I'm not Jack Stack and I'm not a shark whisperer, but I've been in public accounting for just over 40 years. Got into it mainly because my brother, got an older brother, actually three brothers that are all CPAs in St. Louis and myself. So just seemed like something I'd enjoy doing. At the time, he was a auditor that traveled quite a bit with Arthur Andersen, which everyone knows about Arthur Andersen, but it sounded like kind of a neat deal to be able to travel, and ended up staying on here in Springfield and been here 40 years, and every day's a new journey.
Every day's a new journey. Well, I have to ask, I mean, it's obviously you walk into different challenges around taxes all the time and in working with business owners and individuals. What's something that you wish everybody knew about their taxes that they don't seem to quite get right?
It seems like a lot of people want to compare their taxes with their neighbors. And it's like, well, my neighbor always gets a refund. Why don't I get one? And I tell them, I can get you a refund. Let me fill out your W-4. Let me take care of it. You'll get a refund, but refunds aren't necessarily a good thing.
Right.
But they think just because they may not get a refund, their neighbor does or their friend does, they should get one too. So everybody's taxes are different.
Right. Well, I think that is one of the challenges that a lot of people have, is that they don't really establish a tax strategy or have a tax plan. What would you say is the best way to engage properly with a CPA and really kind of create a strategy?
It's really a partnership. I look at it that my best clients and the ones that I'm able to service the best, we have constant communication. So it's almost like a marriage. The more communication you have, the better the relationship. And my best clients, starting about now until the end of the year, we're doing planning. We're looking at ways to maybe save money. If we can't save them money, we can at least say, hey, come April 15th, you're going to owe this much money. They can kind of start thinking about, okay, how am I going to get that? So, but I think it's just having that constant communication and planning. Tax planning's huge. And it seems like some clients, I shouldn't say a lot, but some clients think, oh, I'm just going to have to spend more money with the tax plan. But it can usually save itself, that amount of money just by doing the tax plan.
Right. Well, I think that's really valuable, and I think that there's a lot of business owners who don't look at everything holistically, where it's kind of the individual tax plan that's kind of sometimes the fallout from the business, but it's not all combined together, so that there's really a mitigation strategy or a management strategy associated with how to properly invest in the business and how to balance that against tasks.
That's not just mine, but probably every CPA's pet peeve is when you have somebody that says, I'm going to have my payroll done by this CPA firm. My business is going to be done by this CPA firm. I want you to do my personal return. It helps so much if we can see all the pieces, because it's kind of hard to plan for you personally if I don't know what your business is doing. So ideally, we're doing everything.
Yeah, and that makes a lot of sense. So when it comes to the business structure, there's obviously lots of different ways for an organization to be set up, whether it's a C Corp or an S Corp or an LLC or an LLC electing as an S. How does an individual or a business owner really make a good decision around that? I mean, I think what a lot of people do, where I'm kind of heading is, my gut is, and you tell me if I'm wrong, is that a lot of people just kind of make that decision in a silo, and it's not a holistic approach with both the attorneys and the CPAs. And
again, communication with not only the client but with the attorney, depending on what type of business are they in, what do they expect the future, the first year or two, are they expecting losses, are they expecting income? That can drive that decision. But again, another pet peeve is when somebody decides they're going to do their own, they're going to get on legal Zoom and set up their own business. And it's like, they come to us at the end of the year and say, oh, I incorporated, here's my paperwork. And it's like, why didn't you come see me when you were setting this up? And we can fix things if we know ahead of time, but it's hard to fix them after the fact.
Right. So that good communication up front, making sure that you're establishing that with the CPA really from the very beginning of setting up the business. So on that note, how does somebody know a good CPA versus somebody that might lead them a little bit astray?
I think the best way, you can start with Google, but I've learned that's not always the best way to find a professional, but usually check with your banker, check with your attorney, check with your insurance agent. Usually people are in a network and they'll know who the good ones are and who the ones are to stay away from. And again, the importance of just checking out, getting a referral from a friend that you trust and say, hey, this guy's good, go to him. Or no, don't go to him, go to this guy.
Yeah. So are there any questions that a business owner should ask as it relates to whether or not somebody has expertise in the business arena versus personal, or you think it generally you're gonna get some good?
No, I think there's I believe that some people are better at individual taxes, some are better at business taxes. We were talking earlier about trust and estates. You can't be all things to all people. The tax laws have gotten so complicated. It's not impossible, but it takes a lot of work to stay up on the individual laws and the business laws. So again, I think it's just a matter of finding out and then asking the question, do you do a lot of business returns? Do you do individual returns? Do you have experience in trusts and estates? And if you do, if they answer those truthfully, then that's going to give you your best answer. And most CPAs by and large are honest, and they're going to say, I don't really do many of those. You're better off using so-and-so, which is the advantage of being in a firm. I don't have to know everything. I've got partners that I can say, I'm probably not your best fit. Go talk to this guy and we'll get him involved.
That makes sense, yeah. Well, that reminds me, you worked in the industry for many years before you decided to...
Many. Just one many.
Before you decided to switch and go to BRS, what made you decide to make the move and glad you did?
I'd become managing partner at a bigger firm, and during that time we had a couple of mergers and brought in two firms. The culture changed. I was managing partners that may or may not have wanted to be managed, and I found myself getting further and further away from my clients, and that's really the part that I enjoy the most. But I was having to spend so much time running a 100-person firm. I was losing touch with my clients. I was losing my technical skills. And I thought, this isn't gratifying. It's not what I want to do. And I didn't feel like I was doing anything very well. I wasn't managing the firm well. I wasn't taking care of my clients. I was in the process of building a wealth management practice. And I felt like I was not devoting enough time to any one thing, so I wasn't doing any of them very well.
Yeah, that makes sense.
I started looking at it and thought, I want to go to a smaller firm where I can get back in touch with my clients and have the face-to-face, one-on-one meetings. And
that's awesome.
One of the first people I called, and he said, yeah, I'll follow you over there. He goes, I am so glad you're getting back to taking care of me. I thought, well, there you go.
Yeah, that's the answer. Well, that's awesome. And I think one of the things that you hit on that we harp on and speak to on a regular basis is culture. The culture of the company, the culture that you operate in makes a huge impact on just even your demeanor and being able to work with your clients in the right frame of mind.
The culture changed quite a bit because the main firm I'd been with, we'd been together, all of us, for 30 years. All of a sudden we bring in two other firms with different cultures, and I'm not saying it's not my fault, it may have been, but we just lost our original culture. We tried to be all things to all three firms, and we really didn't do that very well.
Just define what it was. What lesson would you have, if you're going to go back and give yourself some advice prior to doing those mergers, what would that advice be?
Good question. And I had breakfast with a friend of mine that used to be the managing partner for a large CPA firm here in town, and I was talking to him about it, and he said when they did a merger, they said, this is the way things are going to be. You're going to use this software. Here's the processes we're going to use. And if they didn't like it, they didn't do the merger. And he said sometimes the best mergers are the ones that never happen. And I thought we should have learned from that. We kept bending over backwards for these other firms to try to make them happy, and we lost a lot in that process.
Yeah, that's really good advice. So defining, before the merger is complete, defining some of the key components and the ways that you're going to be, probably all the way down to core values, as well as the way that workflows and processes are going to exist.
Just the culture, the way they approach the number of hours they work, the softwares they use, things like that. And, I think if we'd done a better job at that at the outset, it would have eliminated a lot of problems.
I bet that's right. That's good advice. Okay, shifting back to the conversation of the business entity working well with the CPA. A lot of businesses, once they get to a certain size, they'll have a bookkeeper, a controller, maybe a CFO, and they have their own ways of doing things. And obviously, sometimes that's a good thing, and sometimes that's not such a good thing. Is it at a minimum quarterly that they should get together, or what's your read?
Ideally quarterly. Sometimes when we first start working with a client, we will meet monthly just until we get them kind of assimilated and kind of learn more about their business. But then eventually quarterly. Some clients, I've got a client that, they don't need much help. So semi-annually, twice a year we meet. Here's how things are going. We meet like in the middle of the year, and then at the end of the year we start talking about taxes. And that's really all they need. They've got the good process in place. They've got good people in their accounting department. But yeah, or early on with a new client, I like to meet monthly just so I can learn more about the business. And they can learn how we want things done.
Yeah, so there's a lot more synchronicity in terms.
Yep, the synergies are better. Yeah, absolutely.
That makes a lot of sense. So when you first started doing what you're doing and working with some of these other businesses, what were some of the big challenges that you saw that business owners, the mistakes that they're making oftentimes in the way that they're either looking at their books or the way that they're handling things?
Oh gosh, how much time do we have on this? A lot of mistakes. I've got one client I'll never forget. I would give him his financial statement, and I noticed he never opened it, and I figured he opened it after I left. And one time I was sitting there, and he stuck it in his drawer, and I saw all the others. I said, "Do you not look at those?" He goes, "No." I said, "Why not? Why are you wasting the time and your money with me?" And he said, "As long as I've got money in the bank, I figure I'm doing okay." I said, "Well, you got accounts payable, bills you owe that haven't been paid." He goes, "Oh, I never even thought about that. I just figure as long as I've got cash in the bank." So I think one thing is looking at your financial statements, and if you don't understand them, ask the questions. What do these mean? Sit down with me and spend the time it takes. That'd be one. Another one is early on when they're first getting things set up, having their controller or their bookkeeper work with the accounting firm to get the chart of accounts, the general ledger, even the financial statement format set up so that it's easy to use for the owner. Because if you get bad information or information you don't understand, it's kind of hard to run your business.
I think you hit on something that's pretty important. I think a lot of business owners think that because they own the business, they automatically should understand a financial statement. And I learned a long time ago that there's a lot of business owners that don't really understand a financial statement at all.
A lot. And that's, I always tell clients, please call me. If there's something you don't understand, and that goes back to why I like to meet monthly in the beginning, is do you understand what you're looking at? Do you understand the balance sheet? Do you understand the income statement? Do you understand the statement of cash flows? Do you understand how all these tie together? And sometimes they'll say, no, I really don't. And you take the time to go through them. Yeah, I'd rather they be honest than to get to the end of the year and say, I had no idea.
Yeah.
Oh, you should have asked me. So it goes back again. I hate to keep repeating myself, but just, the communication and just going back to what you said, I think business owners, they're proud of what they've built. They think they know everything. They don't want to look stupid by saying,
sure,
I need help.
Yeah.
And it's like, that's not stupid. That's just good business sense. Help me.
Yeah.
Be like me. When I have a problem, I don't sit there and try to figure out my computer problem. I'm on the phone with Sherry or Levi or somebody saying, hey, help me out. I'm not going to sit here and waste my time trying to figure out something I know nothing about.
Yeah, I think that's good advice. And I think it's something that we as business owners don't do enough of, because the challenges are just crazy, and you're going so fast a lot of times that you don't even realize that you need to ask the questions, and then all of a sudden, pop, and you get in trouble or have a challenge that you need to deal with. So I know one of the things that business owners really struggle with is the balance of cash and in preparing for taxes, and how much, you know, is in the business, and then how much that could or shouldn't flow through to the individual. What are some of the best strategies that you've seen to help business owners kind of manage that?
Gosh, it really depends on the business. Companies that have large payroll, you know, we recommend keeping a large cash reserve 6 months, just to make sure that, you know, if there's a pandemic that comes along, you know, you've got money set aside that you don't have to lay people off, you can take care of them. Some businesses that don't have a lot of capital needs, you know, they're pretty much just salaries and, you know, professional service type businesses, you know, maybe you don't need 6 months. But, you know, one of the things I always recommend to clients as early as they can is get a line of credit, even if you don't need it. Get it set up, you don't have to draw on it, but I've had clients wait until they do need it. They send their financial statements to the bank, and the bank's like, we're not loaning money on this. So it's like, let's get it when you don't need it, and that way it's there to draw on later when you do.
I think it's really good advice that you go to the bank and you establish that credit line before you need it, because it gives you the opportunity when you run into trouble and that peace of mind that if you need a bridge between a couple of things, you can just pull on that cash, get you through a tough spot. Not that you want to go into more debt, but you've got the bridge.
I think the pandemic brought that to the light of a lot of business owners. You know, I don't think they ever planned on nobody ever planned on anything like that. So all of a sudden they ran into something they weren't prepared for and was like, oh, I've got this line of credit if I need it. Of course, they had PPP money, but or a lot of businesses did.
Yeah.
But I've got a client that is almost the other way around. He won't take out a line of credit. They're very successful, but they have a lot of inventory, $15 million of inventory, no loans on the book, no debt. Every time they make a sale and collect the receivable, they're buying more inventory. It's like, why don't you guys keep some of that cash back? You know, there's going to be tough times. You're going to have taxes coming up. And they just, oh, we hate debt. You know, we got to have all the inventory we can get. It's like, so not all my clients listen to me.
Yeah, well, we all have that problem. But I think that there's something to dive into a little bit deeper there. That some debt is healthy for business because you can use cash and you can use money and actually make a higher rate of return on the borrowed money than it cost you to borrow the money if you're using it wisely.
Absolutely, and especially before the interest rate hikes. You know, money was so cheap. I had several clients say, I'm going to borrow money for this truck. You know, it's 0%. That frees my money up to do something else.
Right.
Or I can get a loan from the bank for 2-3%. Absolutely. You can do better than that using your money, borrow the money at cheap rates. We'll see where these end up now, but rates have gone up, so that may change that equation. But
sure,
yeah, ordinarily that's been the case.
Yeah, I like that a lot. And I didn't understand the internal rate of return associated with the value of money until I was in business for a really long time. And so I think having an appreciation of how your money makes money in the business is really important.
Yeah, OPM, other people's money.
It's it. You gotta love that. Well, help us to talk through just a little bit around how the financial strategy of the business weaves into a long-term value creation strategy for the business owner. I think that there's a real gap in there in terms of business owners who don't really understand that they need to build value in the business if they're going to exit it and be able to retire and have all those things. And it seems like for a lot of people, it's like it sneaks up on them.
I don't know if that's the instant gratification that all they're worried about is today. But you're absolutely right. I see that happen frequently where somebody is so concerned about, you know, maximizing depreciation, keeping net income down as low as they can. Then they get ready to sell the business. They give their financial statements to a buyer, and they're like, these don't look that great.
Yeah, making it.
And they're not, they haven't built value. Exactly what you said. And I had this come up just right at the end of 2021. A client sold a business, and fortunately, he had always said, I'm not going to pay out more than I need to because I know I'm going to sell this business eventually. Well, when it came time, he got more than he really probably should have, but his financial statements were really strong. And he was always building towards, someday I'm going to exit this.
Yeah. So it goes back to that communication and those conversations that you were talking about. And a good advisor, CPA, is going to come in and say, what's your run, or is this a 10-year plan or a 15-year plan or a 20-year plan or whatever it may be, so that you can.
Yeah, that's an important conversation to have, is what's your exit strategy?
Mm-hmm.
What are you going to do? You're, whatever age, 50 years old, how long are you going to run this? Do you have kids coming along? Do you have key employees that can buy this? If not, how are you going to get out of this with any amount of money?
Yeah.
And the sooner you can get the client thinking about that, the business owner, the better off you're going to be. But a lot of people don't think about it, and then all of a sudden one day they wake up and they're my age with gray hair, and they're like, I got to get out of this business. I've got 3 years. I may be too late to build much value at that point.
Yeah, because you really need 3 years of strong returns, to be able to demonstrate that. Yeah, I think that's really good. Well, one of the things that you talked about earlier was data and financial statements, but I think that there's a big challenge in today's world because of the pace of everything. Getting good data, healthy data that makes sense to the business owner or the decision makers, like you referred to earlier, but getting it in their hands fast enough to be able to respond to it or adjust or do whatever. What are you seeing in your world?
It's big changes. It used to be we would do financial statements for like a J mark. We'd do your July financial statement. Sometime around the middle of August, you'd get a copy. You'd look at it and say, okay, great, I made money, lost money, whatever. Now, clients are wanting, and we're capable, CPA firms are capable of having real-time data. They can get on there at any time. A lot of online accounting softwares give them that capability to get on there and see daily, here's where my sales are, here's my bottom line. The other thing that we like to do is put KPIs, key performance indicators, on a dashboard that when that business owner turns on his computer, up it pops, they can see, here's how much cash I've got in the bank, here's my receivables, whatever, and we tailor those to what does the business owner find important. We're not going to put something on there that you're not going to look at. We want to put things on there that when Tom Douglas turns on his computer, it's going to say, okay, here's the key things I'm interested in. You've got them that quick instead of having to scroll through, 7 or 8 pages of financial statements.
And done really well, you can tailor the information so it kind of tells you the next step, right? I mean, like your action item. So if your receivables are out of whack, or you
inventory's out of whack, my inventory's too low, too high, got cash in the bank, maybe I ought to use that to pay down a loan. So yeah, there's a lot of things that can be used for to make proactive decisions instead of waiting like the old days where you waited until the middle of the next month and it's like, well, this tells me what I did last month. Tell me what I'm doing right now.
Right. Yeah, that's really good. So what are some of the best practices for, besides the communication pieces, in terms of the teams working together, internal accounting teams and CPAs? I heard you say that the softwares are syncing up and working, and we've helped a lot of organizations do that. But talk just a little bit more about kind of same pageness around the teamwork.
Yeah, we like to get involved with setting that up. QBO, QuickBooks Online, that's one that everybody seems to use and works well. But the client can look on it, the controller can look at it, we can look at it. Everybody can see the same thing at the same time. Mm-hmm. They don't have to, hey, I'm going to send you a disk that's got my financial information on it. We can see it immediately. It's like we can log on, see it, be all talking about it at the same time and say, okay, you need to change this because of this.
Yeah.
And it makes a huge difference. I mean, just the timeliness of it.
Oh, yeah, absolutely. How about bigger organizations that have kind of a custom ERP or something that's like that? How are you guys working together in those circumstances?
Usually if they're that big, they've got pretty strong accounting group. They may have a CFO, a controller, an accounting staff, and they don't usually need as much help from us on that. What we find in that case, we're going in and we're meeting with them monthly or quarterly, and maybe it's in the middle of a month. Mm-hmm. But they're getting that information because usually if they're that size, that they have that kind of, those kind of resources, they need less help from us because they've got qualified people on board.
That makes a lot of sense. And so in those heavy inventory, those heavy environments, obviously the tax strategy and some of those things becomes a lot more challenging. So you don't want to just rely on an internal team. You want that outside verification that the decisions that you're making are well, and that you know what your risk is going to be and you're accounting for that tax.
And we can do some interim steps to just check on some of the numbers before getting to the end of the year. This client I was telling you about that's got the large inventory, we're always checking their inventory that's on the general ledger compared to their detail, and just making sure that, because it's such a large number compared to the rest of the balance sheet, it's like we need to make sure that number is accurate, or as accurate as possible.
Yeah, that's awesome. So what are some of the best practices or mitigation strategies to help business owners to ethically and legally mitigate some of their taxes that maybe some people that you would share with some business owners that they're not aware of or not thinking about?
Oh gosh, a lot of times when somebody sells real estate, you can do a like-kind exchange. Basically, you're deferring the gain from the sale of that property into a new property.
Okay.
And you deferred the gain and the tax to sometime in the future. One that we've just recently seen and is relatively new is something called an opportunity zone. Somewhat similar, but it doesn't have to be real estate. You could sell, I had a client last year that sold $200,000 or had a gain of $200,000 from selling stock. He just insisted he didn't want to pay the tax on it. So we found this opportunity zone. It's a mutual fund, basically, of real estate. He invested the $200,000 or the gain into that, and he deferred the tax. And that's kind of a neat thing, because if he leaves it there 10 years, he defers the gain, or actually doesn't defer it, he eliminates the gain of that appreciation. The $200,000, if it grows to $350,000, he doesn't pay tax on that $150,000 gain. So
That's awesome.
that's a big one, and that one seems to be one that a lot of, some of my competitors don't know that much about it. It is relatively new, but we're seeing more and more of these opportunity zones. I think where we're sitting right now sits in an opportunity zone.
Yeah, it definitely does. Oh, that's great advice. Well, any last thoughts that you would want to share with the group in terms of running their business and working with a good CPA? And
I can't stress enough, I guess, how much the communication is important. And I think you had mentioned earlier, not just between the client and the CPA, but get the banker involved, the attorney, the insurance agent. Make sure everybody's on the same page and the right hand knows what the left hand's doing.
really manage the risk of the business overall, whatever that may be.
Everybody's on the same page and everybody knows what's going on. And the last thing I like, and any probably professional likes, is surprises. And so I'm sure attorneys like to be kept abreast of what's going on with their clients, just like we do.
Yeah, absolutely. Well, thanks a lot, Jim.
Okay, cheers.
Congratulations to your success. Cheers to you for owning your journey.
Thank you.